Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to shoot a video for you this evening, or really this morning. It's a little after 2 o'clock in the morning, and I want to shoot a video on technical analysis. We're going to use the current Bitcoin price action, for our technical analysis, but it's actually a lesson that I want to teach you so that you can take this and apply it to your future trading, whether it's with Bitcoin or a different cryptocurrency, or whether it's with a stock or Forex or whatever. So before I jump into today's content, please do me a huge favor. Go ahead and give this video a thumbs up and subscribe to the channel if you haven't already. And with that being said, let's dive right in. So a lot of people are comparing the descending triangle in 2018 to this descending triangle that we are in within 2019. And there's a lot of comparisons. If you're just looking at a chart pattern, they do look very similar. Also, if you add in the 50 moving average, which is supposedly the bull / bear gauge, right? If you're above it, it's bull market. If you're below it, it's bear market, right? They look very similar too, the way they're just kind of oscillating around that line. But what I want to do is I want to show you a key difference in these two triangles. Now remember, I'm bearish, but I'm not bearish to the point where I'm going to ignore facts, okay? And the fact is these triangles have a very, very glaring difference in the two of them. So I'm going to take away these red lines and I'm going to show you the difference. So if you look back here, we had RSI, when this triangle started, RSI was sitting down here making a high of around 60. And then over here, RSI made a high of up around 70, okay? And then over here, RSI got all the way up to about 77, okay? So obviously, RSI was making higher highs. Strength was building, so to speak. The problem is while that was happening, our price was actually making lower highs. Now, there's an actual name for this. And this only, by the way, I want to be very clear about this. This only applies when your asset is in a downtrend. So when you're downtrending, this is the only time this applies. But if you're downtrending, your oscillator, whether it's RSI, MACD, whatever you use, if it's making higher highs, and your price is making lower highs, that's a textbook example of hidden bearish divergence. There were telltale signs all throughout this period. When you get RSI going all the way up to severely overbought areas like it did right here up around 77, but at the same time your price is making lower highs, that's a really bad sign. Unless you're going to short it, then it's a great sign, right? So that's a key difference, because if we come over here and if we start looking at our descending triangle from 2019, that looks something like this. Yes, the chart patterns themselves look very, very similar, but our RSI, it's telling a different story. First off, this occurred in an uptrend, not a downtrend, okay? So that's a key difference. Our RSI is making lower highs while price is making lower highs. That's not a divergence. That's the opposite of a divergence, right? So nothing too special there. However, we do have a divergence, and it's a bullish divergence, okay? What's called hidden bullish divergence. And what hidden bullish divergence means, it means your RSI or your oscillator, your indicator, whatever you're using, is making a lower low, right? For example, like right here, while at the same time your price is making a higher low, like right here, okay? Let's make these green. That is a major difference. This triangle had hidden bearish divergence, whereas this triangle has hidden bullish divergence. So again, I'm a bear, but I have to be aware that there are some bullish signs. This is a bullish sign. Now, it could be that it's already played out, right? Because if you had spotted this, look what happened next. Price actually did break north, and it went up about 17 to 18%. It looks really tiny because the chart's zoomed out, but that's a huge pump, right? 17 or 18% over the course of just a couple of days. From the bottom here on August 30th, it actually went up, within about 4 or 5 days, 17 or 18%. So now, I think that is played out, by the way. But if price came down and made a higher low somewhere in here, and RSI somehow made a lower low down here, yeah, then that would be a triple divergence, and I would think that, oh, this might be breaking north. Now, I don't think that's going to happen, and I think it'd be very difficult for it to happen at this point. If price was to make a new low, if RSI was to make a new low with price where it's sitting right now, it would almost for sure make a new low as well, which would negate the divergence. But I just wanted to shoot this video. Again, this isn't about predicting the current Bitcoin landscape. I've done plenty of videos on that. I'll continue to do those types of videos. But once in a while, I want to throw a video out there with some technical analysis that you can take and put in your toolbox. And now you know, hey, I'm going to start looking for this stuff. At least I hope you're going to start looking for this stuff. So with all that being said, I didn't give out any trade advice or anything in this video, but I do want to remind you that I am literally some guy sitting in a spare bedroom. I'm not a professional financial advisor. I'm not a trade advisor. Nothing in this video is trade advice or financial advice. You should always do your own due diligence before making any type of investment in cryptocurrency. If you enjoyed the video, please do me a favor and hit that thumbs up button now. Also, subscribe to the channel if you haven't already. And don't forget, you can check the description for links where you can follow me on TradingView, Twitter, and also where you can join my absolutely free Facebook group. This is James with Crypto Common Sense. Trade safe.